You're listening to the Breakaway Wealth Podcast, the show that helps you build wealth faster, think outside the box, and break out of the herd. Here's your host, Jim Oliver.
Welcome back, Breakaway Wealth. I'm your host, Jim Oliver, and with me today, Tom Dunkel. Welcome, Tom.
Hey, Jim, it's great to be with you and all the listeners. I'm looking forward to our chat today.
Me too, Tom, and I'm going to let you introduce yourself here in just a second, but I want to just say that right now, it's always funny, and I want you to address this somewhere along the line, and I'm super ADHD, so I don't want to forget, I always love when people say, well, isn't this a bad time to invest in real estate or a bad time to invest in this, or aren't interest rates too high? And you know, you've done this for a long time, and I want you to talk about what you've seen in opportunities. And you know, like it's the noise that scares the crap out of people, like 2008, and everybody lost their money, and everybody was bankrupt, even guys that had $500 million of real estate, and it's just not true. And but if you listen to the noise, you'll never do anything in this world. And you've done a lot. So Tom, tell us a little bit about what you've done in this world and why we're talking today.
Yeah, sure. That's a big topic you just unloaded there, but yeah, we'll dig into it. But first, I'll just give a quick background. So, did my 11 years in the corporate penitentiary after business school, and finally escaped to the entrepreneurial world in 2006. Which the funny thing there was, I actually got fired from my corporate finance job. But it was the kick in the pants that I needed to actually go and do what I really knew I wanted to do, which was do something entrepreneurial. But you're in that corporate situation. You've got the golden handcuffs. I had the stock options and all that. It's tough to know when to leave. So that decision was made for me by my boss, and I couldn't be more thankful. Along the way, of course, 2006 was not a great time to start out in real estate. Went right into the Great Recession, lost my cash hoard that I had set aside to do my entrepreneurial thing, but, battled back, reinvented. And it was about that time that I discovered distressed mortgage debt. And so I hooked up with a partner, and we've built a company called U.S. Mortgage Resolution, which is a distressed mortgage debt company. And we've done over $63 million of revenue in that business over the last 15 years or so, which isn't too bad for, two guys and a laptop and a couple of administrative assistants. So we've done real well there, and it's allowed us to do some other things. So we've dabbled in hard money lending. We have a short-term rental portfolio up in the Pocono Mountains in Pennsylvania, where we're based out of, and we picked up some self-storage facilities, and so we've tried and failed some different things, but I guess that's just how it works. There's definitely no straight lines in the entrepreneurial world, and for the last 20 years, I've been doing things in and around real estate, and you're right, it's definitely not Armageddon out there. I guess that what they say is, the best time to buy real estate was 10 years ago. The next best time is right now. And I think the key, Jim, is people's time horizon. Like if you're looking for, quick returns and, get rich quick kind of thing, then real estate probably isn't for you. It's definitely more of a buy and hold, longer term strategy, get the cash flow rolling, take advantage of the depreciation, tax benefits, and that sort of thing. And that's how wealth is really created in real estate. And I know there's a lot of people who, they try to get into real estate to build, business or wealth, and it's very challenging. I think probably what more wealthy people do that I've worked with, the 9-figure kind of net worth people, is they make their money somewhere else, and then they invest it in real estate and hard assets because it's more of a capital preservation play and a cash flow play and a tax advantage play, as opposed to just a pure growth play. But there's certainly challenging times that come along in real estate, and there are ups and downs. But I tell you what, I'll take those ups and downs on the real estate side over the ups and downs on the stock market side any day of the week.
Well, I think you can control it on the real estate side because you can, like you said, And I want you to explain just to the audience that doesn't understand distressed mortgage debt here in a
Sure.
second, just so people know what you're talking about.
Yeah.
But also what I love is that you've pivoted throughout the years, because you have to pivot. You know, when I moved from South Dakota part-time to Florida full-time, and people said, and I would drive up and down 41 here in Naples, and they'd say, man, everything's so expensive. We'll go 20 miles that way, and it's not. And I ran into this lady who's a dental assistant, and she's like, Jim, I don't want to do this anymore. Like, I want to learn to do what you're talking about on your podcast. And I said, okay, well, like, what are you passionate about? And then she said, I want to build a real estate portfolio, and I want to do this and this. And she had for personal reasons, she wanted to have like a sober living facility, and they get like $1,200 or $1,300 per bed, and they just pack these beds in there. Anyway, and I'm like, hey, that sounds like a great business. And she's like, hey, is Lehigh or this other place, is that bad? Because those areas are a little bit sketchy. And I said, if you told me you were going downtown Naples, I would tell you were crazy. But no, those are the perfect places to go buy a 4-plex, 10-plex, or start with a duplex. Mm-hmm. But you got to start somewhere, which is what I want you to go back and talk about, like what you see, because what you're explaining and what you offer and what you guys do is it's really who, not how. So I want to get into real estate, I could figure out like, okay, I'm going to learn everything I can learn about real estate, and I'll start reading everything I can read for free on Bigger Pockets, and I'll join some community for $10,000 a year, and I'll get deals, and I got money, they got deals, or I got deals, and I don't have any money, and it's that whole thing, and there's nothing wrong with that, but that's active, right? And you're learning, and when you learn, what do? You fail, just like you said. Yeah. So if you want to fail, that's fine, because you'll learn and you'll probably be okay long term. But there's been nothing in my lifetime, in my 37 years or 38 years, I'm getting older, in business where it's get rich quick. Everybody in the mortgage business was getting rich quick in 2006. If you would have gone into the mortgage business, you would have had a 3-year career, and it would have been, it would have been over. Yeah. Right. So talk a little bit about that. I know I threw a lot at you there. Yeah.
Well, I mean, you hit the nail on the head, and I think that's why I have the book over my shoulder here. Is who, not how.
I can see it right now. Oh, great.
Yeah, great book. But back then, I came out of a corporate job. I was pretty accomplished. I was a vice president of a publicly traded company, did a bunch of mergers and acquisitions deals and things like that. But what I didn't have a network in the real estate business. And so I started going to all the local real estate investor meetup groups, right? And so this is, back when you actually got together in person, So, so I'd go to these things and I'd hear a presentation about something I didn't really know anything about, maybe tax deeds or distressed debt ended up being one of them, or buying a quadplex or whatever it was, how do you rehab and stay on budget? So the speakers always had some kind of interesting topic, but it was at those meetings that I started learning about distressed mortgage debt. And it just married up so well with my interest in real estate, with my background in, private equity and putting big debt facilities together for these corporate mergers and acquisitions. So it just checked a lot of boxes for me. And at that time, I was really starting to learn the hard way that, owning the bricks and mortar was a pain in the ass. Yeah. So I figured, hey, let's own the paper instead, and we'll let the homeowner worry about the bricks and the mortar. But just, the quick tutorial on distressed mortgage debt is, even in good times, there are people who run into a health issue or a family issue or job issue, whatever it is, they can't pay their mortgage anymore. So they stop paying their mortgage. And that's really bad, not only for the homeowner, but it's bad for the bank, because banks are very, very highly regulated, right? So they have to take that what they call a non-accrual asset, and they have to put it to the side. And what banks do is they need that capital base to be able to borrow money from the Fed to then go out and lend it and make their fees and their interest spread and whatnot. So if there's a bad loan on their books, it goes off their book, so they can't make that spread. And it's not a 1-to-1 spread. You know, they're able to leverage that capital like 5-10 times depending on their bank charter.
Yeah.
So it's really bad. And so then the regulators will come around from time to time, and they'll say, hey, you've got too many bad loans on your books, you got to sell them. And so that's where companies like US Mortgage Resolution come in. When that bank has to sell that portfolio of bad assets, you know, we've developed the processes over the years to be able to go in and value each one of those assets individually. And to be honest, the bank doesn't really have any idea what's in that portfolio. We know way more about those assets than they do. So it gives us definitely an advantage and an ability to arbitrage. Sorry to throw out a big word there, but
good.
So we buy these loans at a discount, and then we reach out to the borrowers and we try to put a modification or some kind of workout in place, or maybe they have the wherewithal to pay off their loan at a discounted amount. But either way, you know, it's either a high yielding cash flow stream for us, or we get a nice payoff hit at a nice profit. And so we've just been building that up over many years. You know, our first deal was we spent $12,000 for 6 second mortgages. And then now fast forward, you know, we've transacted on over 11,000 loans and, you know, going on $1 billion worth of unpaid principal balance. So it's been kind of a fun journey, but that's distressed debt in a nutshell. And there's all kinds of distressed debt, right? So there's distressed mortgages, there's credit cards is a big thing, auto loans, you know. So once you get into this world, you can really go in a lot of different directions.
Well, I like what you said about that too, because I think that you find, you know, when I'm working with people and clients and teaching them infinite banking, and they say, hey, what am I going to do with this money? Because I don't, and you know, if you go back to the richest man in Babylon, he says one of the tenets is invest in what you know, right?
Yes.
Well, if you have 2 choices: either you leverage somebody else's knowledge, or you go learn it. And neither one of them is the wrong direction. You have to find the right person to partner with, or you have to find something that you're passionate about, because if you're really not passionate about it, you're not going to be very good at it, right? If you go to the gym every day, but you're not passionate about it, or you don't care, then you don't really get results. And it's the same way in building wealth. And so, okay, so how do people like interact with you? Like, is it on your website? Is it YouTube? How do they learn more about you?
Yeah, sure. I'd love for people to go to investwitheagle.com, or you can pick up a copy of my book, the Wealth Builders Playbook. It's just kind of chronicles the different things I've learned over my journey, and kind of in like a story format. I'm a golfer, so I have a lot of like golf stories in there about, you know, the golfers. They go out, you know, the guys go out to play, and the one guy feels bad because the other 3 guys are talking about these, you know, alternative investment deals that they've been investing in, and he just lost 20% in the stock market. He wants to learn how to do it. So they, you know, they sit on the patio at the club and have a little bourbon or Macallan's and talk about alternative investing. So it's a little corny, but there's but there's some good lessons in there, things that I've learned along the way, including my due diligence method. So over the years, I've developed a due diligence method for evaluating investments. It's called the SAFE method. Just real quick, SAFE is an acronym. So don't come to me saying, "Oh, you said investing was safe." No, I'm not saying investing is safe. SAFE. S stands for sponsor. You got to know first and foremost who you're doing business with. What's their track record? You know, what do they like? You know, are they a criminal of some kind? They're hiding it. So you got to dig into that. And then you start looking at the other things. Then you look at A for asset. You know, what is it that you're investing in? F is for financials. What are the financial projections? Are they believable? Has the sponsor delivered those kinds of returns in the past? And then E finally is for exit, because it's not like you can go to schwab.com and click and sell your position in a multifamily deal or a mobile home park deal, because it just doesn't work that way. So kind of like we were saying at the beginning of the podcast, you know, you need to know that investment horizon. It needs to match up with your specific goals and needs as an investor.
No, it's funny. That was where I was going next. Is I was going to ask you about your due diligence process, because I think one of the things for me that I see that holds people back, right? And there's all kinds of people that have money sitting in government plans like a 401k, an IRA. It even could be self-directed. I mean, I don't really care. Anytime the government controls your money, you're going to lose. And so I want you to, and I was going to go to your due diligence process, but let's pivot. And, this is an objection that I get sometimes. I got $500,000 sitting in my 401k, but I really can't do what Tom's talking about because I can't get the money out of there without paying tax and a penalty. But if you invest in real estate and you did like cost segregation or something like a strategy like that, there's potentially you could pay no tax and you could just pay the penalty. So for those guys that are sitting there on these non-qualified funds, are those guys you can help and get some depreciation in your program?
Sure, absolutely. I mean, so just real quick about Eagle Capital Investments. That's the company I just started recently. It's called a fund of funds company, which is just basically a fancy name for I find investments for my investors in other people's deals, right? But what I'm doing, Jim, is I'm looking for deals for myself.
Yeah.
Right. So I'm at a stage in life where, I'm kind of dialing back the active activities and I'm dialing up my passive activities so I can spend more time on the golf course and the beach and visiting my adult children, that sort of thing. So I have access to these operators I've come to know, like, and trust over the years. Right. So they're in multifamily, mobile home parks, private lending, this and that. And that's exactly one of the things I'm looking for are the tax advantages that commercial real estate investing provides, because that's if you're a high earner and you're a high taxpayer, I mean that's a bad combo. You want to be putting some money into these alternative assets, really, so that a lot of the people that I work with are high achievers, business owners. And like a lot of us in that world, like we have so much of our wealth tied up in one single place, whether that's your law firm or your medical practice or your business. And it's important to diversify your wealth and income streams outside of that, so that if some disruptive force comes along, like, I don't know, Jim, AI, it could wipe out your business, right?
Yeah.
Overnight. So if you want to weather that storm in style, you've got to have these other wealth and income streams on the side. So that's really what I help people do is they can piggyback on my 20 plus years of experience, and they don't have to worry about the operators because these are people that I know, like, and trust. I've done business with, so that S in the SAFE method is, you can check that one. These are people I have, can text them right now. I have direct access to them and, can ask the questions and do all the due diligence. And so that's what I bring to the table is those relationships so that my investors can take advantage of my network and my background and diversify themselves appropriately.
I love that. It's funny. Okay, so let's talk about golf because I just came from a golf store, and I've sold 5 putters, and so I decided I should be able to buy one, and so I bought like the new Spider ZT, so the zero torque one.
Okay.
And I have a perfect putting mat in my other room, and I was hitting putts waiting for this interview. And I love it so far until I get it out on the course tomorrow. But
right.
One of the things that I tell people, like, I feel like working out is like golf. And I play golf at least 4 days a week and sometimes 6 days a week. And I live in Naples, Florida. Where are you at, Tom?
I'm outside Philadelphia, near Ronimink Golf Club, where the PGA will be next year.
Nice. Yeah. Well, I'm a member at Valhalla. They just had the PGA last year.
Oh, beautiful.
So one thing that I notice, and people ask me all the time, because I try to play with guys that are in their 20s and 30s, because I'm really stubborn. So I only play the tips. And well, I shouldn't say that at Valhalla because it's like 7,600. Okay. But I play the black tips. They don't even put out the golds. Those are for the pros, right?
Okay.
But it's 7,000, and it's not like 7,000 in Florida. it's like 7,000 of work,
Right.
right? You're hitting 200 yards in, 5-iron or something into the green. And my friends down here, they want to move up and kind of dumb it down. But what happens is, with golf, it's pivoting, right? You hit a shot and you go, okay, it didn't go in the hole. So now I got to chip, or didn't hit the green. I got to chip, and then I got to make the putt. So like if I can get down in 2, then I'm a pretty good golfer. If I'm really not sure how to chip and I bladed over the green, well, guess what? Double bogey just came into play instead of par. Right. And so like it's the same way when you're building wealth and investing is the less mistakes you can make, the better off you're going to be. Yes, you learn from your mistakes. I get it. But knowing how to do it the right way, if you never had a coach, I guess is what I'm trying to say, or you never had somebody, if you've ever played with the guy that gives you lessons, it's like the most valuable time you're on the golf course, because he gets to see everything you're doing in real time. And so, having those resources, like you said, I love, and we're going to put your book in the notes, and we'll put a link to directly to buy the book. And I'm going to definitely buy the book. I love to read. I wasn't smart enough to get into business school like you, but I learned my love for education happened after school for me.
Yep.
When I want to learn something about golf, and I just had a lesson yesterday, and there was one key thing with my left hand that it was just like a light bulb going off. Yeah. And all of a sudden my 7-iron was going 185 yards instead of 180 yards. And I was like, damn, that's
nice.
That's cool. And when you get those little epiphanies and those breakthroughs, that's how you get better. And it's the same way with your wealth. And, Dan Sullivan is probably one of the smartest guys I've ever met. And in Who Not How and The Gap and the Gain and all of his books, I mean, I highly recommend those books. I can't recommend them enough. And I'm going to get to the book that you'd recommend, but maybe I already know the background. Tom, throughout all this time, and I love what you said about, you are in prison when you're working 9 to 5 or you're working for someone else, right? It could be a nice prison,
sure,
right? But when you're out on your own, you learn things that give you confidence, and you learn things. People give you advice. Some of the best advice I ever got was from a janitor that told me to read an hour a day, right? And I don't even know if he was right, but he said, if you do that for 6 weeks, you'll be an expert in whatever subject you're reading about. And so this was a janitor. I was like 22 years old or 21 years old. I'm like, okay, I'll do that. And it worked. But so thank God, right? But what's the best advice anybody's ever given you, Tom?
Oh man, the best advice anyone's ever given me. It was interesting when I was looking at leaving corporate America, because I had some ideas about leaving previously. So I had started putting some feelers out, and I met with a family friend who was a very successful guy, Harvard Business School, built a couple businesses. And so we went out to lunch, and I guess it wasn't so much advice, Jim. It was his mentorship, because I was talking about, my next move, should I take this job, this or that? And he was like, yeah, you could take that job, but, I think from that point, you could definitely become like the president of that division or something. And look, I had loving parents and they were awesome and everything, but they never spoke that kind of just encouragement into me. Right. And so that really lit a match in me, lit a fire in me, like, wow, here's a guy, he's known me my whole life and he sees something in me and he's a successful guy. And so I think maybe it kind of goes back to the, just the networking and the who, not how, and that sort of thing. But, having those mentors that can just speak that kind of encouragement into you, I think is really, really important. And I'll never forget that lunch, like, wow, I could be the president of a company. And now here I've, been able to build several companies. So it's been pretty cool.
That's cool. I had a similar experience when I found this guy that he was doing like he was like the number one guy in Denver. I lived in Denver at the time, and I took him to lunch. I finally got him to go to lunch with me, and he was going to show me what he does and how he was so successful. That's my idea of what the lunch was. So the first thing he says to me is, show me what you do when you meet with your clients. And I said, okay, because I thought I'll show him and then he'll show me. I showed him and he said, yeah, that's pretty much what I do, but I do it with people that have a lot more money than the people you're talking to. And he said that what I would do if I were you is I'd go join the best country club that'll have you. And even if you can't afford it.
Yeah.
And I would go there every day. And I didn't play golf at the time. And so it was perfect. It was great. But I was like, wait a minute, I'm getting paid to hang out at the country club and go play golf with guys.
Yeah.
And you know, so those little things in our lives, whether it's the janitor or your mentor or this guy, they give you nuggets that at the time, sometimes I was kind of mad when I went away from that meeting. Like, that's it? You do what I do, but with people a lot more money than me? I mean, I was like 20, whatever. And I was mad. But then 90 days later, because I'm a slow learner, I was like, it hit me and I was like, oh, that guy just gave me gold. Right. Yeah. All right. So last question, Tom, before we wrap it up, and we're going to put, again, like all of your contact stuff, your social media stuff, YouTube, anything like that you have, we're going to put it in the website for sure. But if God came down from heaven and only allowed you to retain the knowledge from one book that you've read, what would that book be, Tom?
Oh man, there's so many good ones, Jim, that come to mind. But
you can give one or two if you. I mean,
if I had to narrow it down to one, it's probably one that isn't talked about as much as, like, you know, the Who, Not How, and those are amazing books, and I highly recommend them. But there's a book I read years ago called The Compound Effect by Darren Hardy, and that book really lit my fire, like kind of like my mentor did, because it just talks about how these little incremental changes, you know, they have this compound effect over your life and over your career. So every little decision that you're making throughout the day, it's like, are you moving closer to your goal or further from your goal? And so I've experienced that personally, like just, you know, with the reading and the knowledge gathering and the podcast listening and those little things that just, you know, help to grow you not only as a person, but as a business leader as well. So I would,
book right over there.
You have it? Okay, cool. Yeah, I would definitely check that one out for sure.
So one thing I love about the compound effect, and I talk about this in investing, is there's interrupted compounding and there's uninterrupted compounding. And the example that I use, and this is not a real life example, it's a blown up example, but if we were going to look at a photograph and we wanted to see the tiniest detail, we'd blow it up as big as we could get it, right? So if you took a penny, and you've heard this before, but if you took a penny, and my numbers might be slightly off because I don't have it in front of me, but you took a penny and it doubled every day, right?
Right.
And let's say at day 22, you have like $30,000 or something like that, right?
Yeah.
And your car breaks down and you got to go trade the car in and buy a new car, and you need 30 grand. So you take that money out of that account. What happens to your compounding at that point? It stops and you start over. And people do this their whole lives. But what if you didn't stop the compounding for 31 days? You know, and by the way, if you stop the compounding on day 22, at day 31, you end up with $2.56. But if you didn't stop it, you end up with $10,700,000 and some change.
Right.
Okay?
Right.
So the point is that whether it's your health, you're lifting weights, and you're just trying to get healthier every day, just a little bit. Hey, I'm just not going to have that ice cream today. Just little incremental changes add up. And that's a brilliant book. Anybody that hasn't read that book, it's, you know, and again, there's a reason. There's only 5 books on that shelf over there. and that's one of them, because it's, you know, I've read it, I don't know how many times, but it's just a reminder.
Yeah.
It's a reminder every time you come in here, try to get a little bit better. You know, and so I love that. Tom, thank you so much for being here. And I love that you have this diversified background and you have these different opportunities, and you've kind of vetted the people that you're working with, you know, like, and trust already. Yeah. And so people, you know, reach out to you. And I would encourage audience, this is how you get better. And this is how you find the people that you want to work with is go and check out Tom's stuff, read his book. And if you go, man, I really have a connection with him, then work with him. And for some reason, if there's not, he doesn't want you to work with him if there's not a connection either.
That's right.
But, you know, he's gone through a lot of times and made money. So like, this is the who, not how. So Tom, thank you so much for being here. Audience, we're going to wrap this up like we always do with the incredible words of Earl Nightingale and the strangest secret. Take it away, Earl.
Here's the key to success and the key to failure. We become what we think about. Now let me say that again. We become what we think about.
Thanks for listening to the Breakaway Wealth Podcast. Be sure to subscribe to this show wherever you're listening so you never miss an episode. If you want to start increasing your wealth building ability right now, go to community.createtailwind.com to join our free online community and get access to free, in-depth training designed to help you build real, lasting wealth. See you next week.